All right, let's take a deep dive into Krishana Phoschem Ltd. We've got a whole bunch of stuff here to unpack. Official reports, financials, even a fancy investor presentation.
Indeed, quite a collection. We've got reports from the National Stock Exchange of India, their financial statements, and a slick investor presentation, all about their performance for the quarter ending December 31st, 2024.
Hot off the presses, huh? So we're
Yeah.
getting a sneak peek into this fertilizer company, right?
Exactly. Fresh from the financial ovens, so to speak.
Love it. Okay, let's start with the minutes from the Board of Directors meeting, January 15th, 2025. Seems like they kept it short and sweet, just over an hour.
Yeah, it was a quick one, 3:00 p.m. to 4:15 p.m. to be precise. The big thing, the main outcome, was the approval of the financials, the unaudited results for the quarter and the 9 months, leading up to December 31st, 2024,
Okay.
all prepared according to the Indian Accounting Standard
All
34.
right, got to make sure everything's transparent, like a universal language for these reports, I guess.
Absolutely. Makes it much easier to compare companies, apples to apples. And there's also a report here from an independent auditor.
Oh, so somebody's double checking the work.
Precisely. They went over everything, and they say they didn't see any problems, no reason to think there are any misstatements or anything's missing.
That's always good to hear. Speaking of things that could be missing, though, I did notice a loan mentioned in here.
Ah, yes, they do have a loan outstanding, 318.39 crore rupees.
Um, is that a lot? I always forget how much a crore is.
10 million?
10 million. Okay, yeah, that's a big number.
It is a significant amount, yes, but there's no indication of any missed payments or anything. And importantly, this seems to be their only debt.
No hidden surprises.
None that we can see from these documents.
Okay, that's a relief. So that brings us to this investor presentation, and it's pretty exciting stuff, I gotta say.
It is, rather. Right off the bat, they're talking about a record-breaking quarter. Huge jump in sales, over 32% year over year.
And the profits, wow, over 450% increase.
Yeah, that'll certainly get investors' attention.
Any investor, I'd say. But, one of the things they highlight here is this thing called EBITDA.
Ah, yes,
I
EBITDA.
feel like I should know what that means.
It stands for earnings before interest, taxes, depreciation, and amortization.
Right, yeah, right, of course. But why? Why is this so important?
Well, think of it this way. It shows you the profit from their core operations before you get into all the complicated financial stuff.
So it's kind of like a clearer picture of how much money they're really making.
Exactly. And in this case, their EBITDA growth is really impressive. It tells us that their fertilizer business, their core business, is becoming much more profitable.
More efficient.
More efficient, yeah.
Like that means.
More potential returns for investors.
Okay, now we're talking. So digging into what's driving this growth, their NPK fertilizer sales, they've just exploded.
Absolutely. They're reporting a volume increase of over 200%.
200%. That's wild.
It is quite remarkable. Now, part of this is probably due to the Rabi season.
Bobby season.
It's the main cropping season in India. Runs from October to March.
So farmers are stocking up, right? Getting ready.
Exactly. They need NPK fertilizers for a good harvest.
But even with that, 200% is a huge jump.
It is, yes. Makes you wonder if Krishana Phoschem is really outperforming the competition.
Or maybe the demand for NPK is just that much higher this year.
That's another possibility, yes.
Something to keep an eye on. Now, they also talk about their capacity utilization. They hit 100% for SSP production and 79% for DAP NPK.
Right, both very good numbers.
What does that tell us, though? I mean, what's the significance?
Well, think of it like this. They're running their factories at full speed, basically, squeezing out every ounce of productivity.
Less waste.
Less waste, more output.
So more bang for your buck if you're an investor.
That's a good way to put it.
And they also make a big deal about their vertical integration.
Yes, that's a key
Yeah.
part of their strategy.
But what does that even mean?
It means they control a lot of the production process, from the raw materials all the way to the finished product.
So they're not relying on other companies as much.
Exactly. They can take low-grade rock phosphate and turn it into complex fertilizers without having to depend on suppliers as much.
So they have more control over costs.
More control over costs, yes, and they're less vulnerable to supply chain problems.
Makes sense. And they're proud of the fact that they're the second largest SSP manufacturer in India.
Yes, quite a significant market share.
They're not just playing around, they're a major player.
Absolutely. And they've secured a long-term supply of rock phosphate, which is their key raw material, remember?
So they're thinking ahead.
Thinking ahead, planning for the future.
That's always a good sign. But before we get too carried away, we got to remember, this is just one piece of the puzzle.
Right. We still got a lot to look at.
Okay, let's dive into those financial statements and see what else we can find.
That's a great idea.
Okay, we've got a good overview now. Time to roll up our sleeves and get into the details. These financial statements, what jumps out at you?
Well, one thing I noticed right away, the cost of materials, it's way up, like over 75% higher than last quarter.
Whoa, that's a big jump.
It is, but it's not entirely surprising. They've really ramped up production, remember, especially for NPK fertilizers.
Right, and they're vertically integrated, so a lot of those costs are coming from their own operations.
Exactly. It's a trade-off. They have more control, but they're also more exposed to changes in their own input prices.
So are they managing to keep those costs under control? Are they still making a profit?
That's the key question, isn't it? Let's look at their EBITDA margin.
EBITDA, our old friend. What's the story there?
Well, even with those higher costs, their EBITDA margin actually went up year over year from 10.2% to 14.6%.
So they're making more profit on every rupee of sales.
That's what it looks like.
Impressive. They must be getting better at controlling costs. Or maybe they're raising prices.
Could be a bit of both. It suggests they have some pricing power, which is a good thing.
Right, they're not just at the mercy of the market.
And let's not forget that long-term supply of rock phosphate, that helps protect them from price swings too.
Smart move. Now, I did notice something interesting here. Purchase of stock, it was really high in Q2, like over 32 crore rupees. But this quarter, it's way down, only 5.6 crore.
Interesting observation. Remember, they were anticipating higher demand for the Rabi season.
Right, right.
So it looks like they stocked up in advance in the previous quarter.
So this lower number just means they already had what they needed.
Exactly. They were prepared.
And there's a similar fluctuation in changes in inventories too.
Makes sense. If they're ramping up production, their inventory levels would be going up and down.
They're juggling a lot of moving parts.
Okay.
But it seems like they're doing a good job of managing it all. Now, what about other expenses? Any red flags there?
Well, employee benefit expenses are up a bit, which is normal as the company grows.
Yeah, you got to hire more people to keep up with that growth.
And depreciation and amortization expenses actually went down slightly.
Is that a good thing?
It could be related to their new DAP-NPK plant. Once a big asset like that is fully operational, the depreciation charges tend to stabilize.
Makes sense. But finance costs went up. I thought their debt was pretty low.
It is, but interest rates have been rising globally.
So even a well-managed company can be affected by those bigger economic trends.
That's right.
There's one line item that's really bugging me, though. Other expenses. It's almost 50% higher than last year.
That's a bit of a mystery. These statements don't give us a breakdown of what's included there.
So we don't know what's driving that increase.
Not from this information, no.
That's a bit worrying. What if those other expenses keep going up?
It could definitely eat into their profits, even if their core business stays strong.
Definitely something to keep an eye on. Okay, let's talk about earnings per share. EPS, the bottom line, right?
The bottom line for investors, yes. It tells us how much profit they're making for each share of stock.
And for Krishana Phoschem, it's looking pretty good.
Yes, their basic EPS for this quarter is 3.32 rupees per share.
That's a big jump from last quarter. And way up from the same quarter last year when it was only 0.6 rupees.
Quite a turnaround.
It seems like their strategy is working.
So far, so good. But we need to see if they can keep it up.
One quarter doesn't tell the whole story.
Exactly.
Now, I did notice a mention of bonus shares being issued back in October 2023. What's the deal with those?
Bonus shares are kind of like a stock split. But instead of dividing existing shares, the company issues new shares to shareholders for free.
For free? Why would they do that?
It can make the stock more affordable for smaller investors, and it can increase trading volume.
Okay, I see. But if there are more shares out there, doesn't that dilute the earnings per share?
It does, yes. That's why Krishana Phoschem has restated their EPS to account for those bonus shares.
So the numbers we're looking at are already adjusted.
Yes, they've taken that into account.
Good to know. It's all about the details, right?
Absolutely.
Okay, so we've covered a lot of ground here. Strong revenue growth, good profitability, a management team that seems to know what they're doing, but we've also found some things that need more investigation.
Yes, like those other expenses. And the potential impact of rising input costs.
And we can't forget about the bigger picture.
The competition, the market, the global economy.
Right. There's always more to the story. Now, before we move on to that investor presentation, I want to talk about their debt situation.
Yes, the 318.39 crore rupee loan.
It's a big number.
Oh.
But they haven't missed any payments, right?
That's right, and it seems to be their only debt.
So how are they managing it? Are they taking on too much risk?
Well, they say it's from borrowings from banks' financial institutions, so it's a standard loan from reputable lenders.
Nothing too crazy.
And their credit rating is a stable.
Oh, this sounds pretty good.
It is. It means they're considered a safe bet.
So while we always need to be mindful of debt, it doesn't seem to be a major problem for them right now. All right, with that in mind, let's see what they have to say in their investor presentation.
Let's hear their side of the story.
All right, we've seen the numbers. Now for the show. Let's see how Krishana Phoschem tells their story. Time to crack open this investor presentation.
It's always fascinating to see how the narrative matches up with the data.
Yeah, like getting a peek behind the curtain. And speaking of curtains, they start off with a safe harbor statement.
Ah, yes, the legal disclaimer. Always a good reminder that projections are just that, projections.
Right. Got to keep our expectations in check. But legal stuff aside, let's get to the good stuff. They've got a slide here showing their performance trends, and it's a pretty impressive picture.
Definitely a nice upward trajectory. Revenue, EBITDA, PAT, all moving in the right direction. They're clearly proud of that EBITDA margin.
And they should be. We know how important that is. They really highlight those key highlights from the quarter. Record sales, improved profitability.
Exactly, echoing what we saw in the financial statements.
But they really emphasize that MPK sales volume. That all-time high, over 200% growth. It's like a centerpiece.
It's a bold statement for sure. Shows how they're dominating that market segment.
And they've got those capacity utilization figures too. 100% for SSP, 79% for DAP MPK.
They even included a table showing the trends over time. You can see how they've been steadily ramping up production, especially for DAP MPK since that new plant came online.
That investment is really paying off. They're in sync with the market, meeting that demand.
More than meeting it, it seems. They've got a chart here comparing their growth to the industry average, and it's not even close.
They're blowing the competition out of the water. Makes you wonder who they're taking market share from.
That's a great question, something to look into.
Now, there's a quote here from Mr. Oswald, the chairman. Always interested to hear what the leader has to say.
He's happy, of course, talking about their strong performance, the surge in MPK sales, particularly during the Rabi season.
He's proud of that 200% growth and how it's boosted their EBITDA per ton. 5,800 rupees per ton, that's a healthy profit margin.
They're definitely making the most of these favorable market conditions.
Then they shift gears and give a bit of a company overview. You know, the who we are kind of thing.
The vertical integration, their market-leading position in SSP, their distribution network, the secured rock phosphate supply.
All the key points we've been talking about.
It's a consistent story, aligns with the data.
They're painting a picture of a company with a solid foundation. And they also highlight their facilities, their certifications.
Their commitment to sustainability.
They got to appeal to those environmentally conscious investors.
Absolutely. That's a big factor these days.
It's a well-crafted presentation, no doubt. But the big question is, does it inspire confidence?
Based on what we've seen today, I'd say yes. They've got strong financials, a clear strategy, and a management team that seems to know what they're doing.
They're ticking all the boxes.
Of course, there's always some risk, but they're taking steps to mitigate those risks. Securing their raw materials, managing their debt responsibly.
And that vertical integration gives them a real advantage. They're not just riding a wave, they're building something sustainable.
Exactly. That's the key takeaway. This isn't just a company having a good quarter. It's a company positioning itself for long-term growth.
So as we wrap up this deep dive, what's the one thought you want to leave our listeners with?
We've seen Krishana Phoschem's impressive turnaround, their strategic moves, their ambitious plans. But think about the bigger picture for a moment. The fertilizer industry is facing a lot of challenges. Climate change, population growth, changing agricultural practices. How will Krishana Phoschem navigate these challenges? What innovations will they embrace? Those are the questions to ponder as you continue your own research.
Great point. It's not just about the numbers. It's about understanding the context, the trends.
The future, ultimately.
Well, this has been quite a journey. We've learned a lot about Krishana Phoschem.
And about the fertilizer industry as a whole.
We hope you've enjoyed this deep dive as much as we have.
Remember, knowledge is power. Keep exploring. Keep asking questions.
Until next time.